Um, Good afternoon again. Um, Glad you are available here. Uh, in my previous video, I'd mentioned a couple of things, and I wanted to go deeper into one of the concepts that I mentioned. And basically, I'm going to go deeper into the concept of top-down analysis and how do you go about it. And before I start, um, someone told me. If you want to have a smooth ride, make sure you go with the flow of the river. And for that reason, um, top down analysis tries to assist you as a trader to understand which side of the market is moving. And from that, you are able now to, look for trades that are within that side, or else you're not trying to go against the flow, but then you're going within, or else you're focusing with the rhythm of the market. And for that reason, when I say that we're looking at what we call the bias, basically, if you're looking at it, if the market is buying on a higher time frame, then the probability of the market to continue buying will always be higher than you counter trading. And for that reason, I just wanted to take you through the process of top-down analysis, and from the top-down analysis, I will also mention a couple of things on the order flow, and then we call it a day. Once more, thank you for watching my previous video, and let's go into it. And when we talk about top-down analysis, basically we're talking about looking at the market from a higher time frame to the lower time frame. In the higher time frame, we're talking about weekly, daily charts, 4-hour charts, and that is up to what we call the top-down analysis. Once you're done with 1 hour analysis, from 4-hour analysis, we actually move to what we call the structure, which I'm not going to discuss today. That's not the main topic, and let's dive into the top-down analysis. And what do you mean by top-down analysis? So let's go direct into it, and I will start with 1 week. This is actually a Nasdaq chart, and from that you can realize that the market is actually very bullish, and just because the market is very bullish doesn't mean that the market is not going to retrace or give opportunities for counter trends. Let's say if we look at this area, this is a counter trend. You couldn't be buying at that market. So this is the concept of order flow that you need to be able to look at. These a selling market. Remember also, we also have this area also is a selling market. Is a selling market, selling, and that's it. But then let's go now. What do you see in the market? And you're not actually using so much. There are no tools for you to identify if the market is bullish or bearish. These are bare eyes, and you can realize that what is in the screen is that the market is actually very bullish. That is on a higher time frame. That is weekly chart. So you understand from that point is that most of the trades, if you're a swing trader or a positional trader, it's much easier for you uh, to buy more than to sell, especially for swing traders or else positional traders. You're looking for opportunities as a buy. But then for we have the traders like me who are not actually looking to catch this wool move, but then we're looking at pips, like let's say 300 or 200 pips on daily basis. So that's enough, So once you're done with the weekly chart, we move down to lower time frame. Just to emphasize on something, before once you start doing what you call the top down analysis, it's very important to have a side note on the side, such that you can be able now to write down these your analysis. And on a weekly chart, you'll find that just a moment, on a weekly chart, I don't know why this color it's not. Sorry. So let me use black. So we have the weekly chart. and weekly chart we are actually bullish. Remember that's enough for actually for a swing trader or a positional trader. You understand that, and then now the remaining part is actually to look for retracement and then get into the trade and then still continue buying. So for that, we are bullish on a weekly chart, and then we go lower to daily chart. And for the daily chart, you can actually realize also that we are also bullish. We are also bullish. Um, we are also bullish for that chart. Remember, it's actually very easy and to use a 12 months period trading history. So on a daily chart as well, we have the market being bullish as well. And just a moment, this is daily bullish still. So from that point, you already have a mind or else an idea in your mind that the market is going to buy eventually, unless there's something technical, fundamental that's going to distract the market. But for now, we're actually bullish. So for the daily, we are bullish. And then we go to what we call the 4 hour chart as well. And as I mentioned, it's very important to use relevant information, which is for the past 12 months. And for the past 12 months, still the market is still bullish. You know, um, around from here, from October last year, the market is still bullish, but then you can realize that we have retracements here, retracements here. And what is coming, the market coming back for? This is actually a specific demand that is very important to mention. There's also a demand. Um, and it is from those areas that you wait for the market to retrace for you to be able to continue with the trend. Remember, they say the trend is your friend, and I'm not going to go against that. That's the reality. You know, as much as I trade my own concept, I'm not going to um, say that the concepts that have been in existence in history that did not work. But for this one, we go to 4 hour chart as well. And just a moment, we'll share. Okay, Control Z, and we say that for 4 hour chart, the market is still bullish. Okay. What is remaining? We're remaining with what you call the 1 hour chart. And once we're done with 1 hour chart, we actually now start looking at other concept of what we call the structure. We have what we call the money, the sell models, as the sell models and buy models. But at that specific area, we're done with top down analysis. It's simple as that. The market is bullish. you know for scalpers, you can also actually do what we call the top down analysis for these for the same, because scalpers are using like 1 minute, 5 minutes, and for that you will actually use 1 hour is the higher time frame. you know but for that specific class, that was the only thing that I wanted to share with you guys. You don't need anything else. You need to have what you call establish the buyers, and once you establish the buyers, you come and draw what you call the areas of interest, which are either demand zones or else imbalance. Those are areas that I will be able to touch on in my next video. In the meantime, let's also do for the same for US 30. um, this is my chart for US 30, and you can actually, if we start again from a weekly chart, you can see that the market is actually very bullish. It was actually very bullish this specific area, this specific period, and then we had a bit of a drop to an imbalance, and then we have a bit of consolidation, and then the market continues to rally. We're not going to see that the market is not going to retrace. No, it's very important to be very careful with this. But then I will be able to touch on areas where we will be talking about, when do we notice that, or else identify when the trend is changing. And for that, so that we can be able now to also follow what we call the order flow. Basically, once you're done with the buyers, now we go to the market structure. From the market structure, we go to the order flow. Sorry, we we move from the market, we move from the buyers, which is the top down analysis, and from the top down analysis we go to what we call the sell or else buy models, and then from the buy to sell models we move to structure, and after the structure, it is from the structure that we now develop what we call the order flow. For that, I think that's a topic for another day, and those are topics for another day. And this one is it's a buy market as well. You can realize on daily time frame as well. We also having a bullish market, and to for our chart we also having a buy market. As I said, being bullish doesn't mean that the market is not going to retrace. Remember, as I said in the Nasdaq as well, we have a buy market, and then the market comes back to a demand. And then actually there is a 50% level. Let me just see. Um, See, this is a gun box, and then from here you'll notice that this is a 50%. It is within the 50% level, of that move. These are areas that you'll be able to touch on in future. And what do we see here? You also realize that from here to where the market is going to, for now we're still bullish. So I don't want to touch on that area. That's finer details of the structure. That is still the market is really bullish, and also you can realize that on a weekly chart, on a 1 hour chart, the market is actually still bullish. It's still consolidating, and I would appreciate to see this market come back to this area before buying further. So yep, still bullish. So you're looking for opportunities that are going to give you, you know, uh, not just you're not gambling, but you flow with the flow. Let's look at what you call DXY. Sorry, because I rarely trade currencies, but I think it's also my duty to also touch on these areas. So for DXY, you actually realize the market has been bullish on a weekly and then came back and then did what you call a consolidation, and the market is actually consolidating. As much as this, it's a very big range on a weekly chart, it's actually consolidating. Remember, look at this, the market has been coming down to a specific demand around here. For those who trade support and resistance or demand, the market is still consolidating in this given area. We have an imbalance around here. It's been there's a specific demand around here. On this one, it's on a daily time frame. If we touch on daily time frame, um, you'll realize that this is actually the last demand uh, before this push, and then we have this consolidation. So the market is still consolidating, but then you have daily time frame, which is the market is consolidating. And for consolidating market, I believe the best way to approach it is through using structures. Is structures buy model and sell models. For you to remember, trading is a game of probability, and you don't want to be caught yourself in a way that the market is actually buying. Like I do sometimes, I don't know why, what happens, and you still sell. I don't know, trying to catch the tops and stuff. You trying to catch the top is one of the worst, the worst kind of trading. Don't catch the tops, just or else the lows. Just flow with the moment, because at the end of it all, you're here to make money, not to show people that you're good at what you do. Let's go to, you see, if I look at it from a point of um, structure, we have these this is a sell model. We have this another sell model. This is a buy model. Remember, market moves into areas. Once you establish a sell model, market moves to the buy model, sell model again, and then within that time frame you can be able to work effectively with specific areas. I was so damn sure that the market would buy from this area, so 100%. This is DXY, and from that you buy, you sell your GBPs, or else your counter, your counter currencies. So if you look at also most of the favorite assets most of you guys trade is gold, and you can actually realize that the market is still buying. Let's say on a weekly chart, the market is very bullish. There's no reason you're going to sell this market. Yeah, of course, we will have retracements, but for now, if we look at the top-down analysis, is that the higher probability is that the market is going to be buying. So that's it. This is the buy. This is a market which is buying. Once you establish that, you come to the lower time frame, and the market is actually still very bullish. Though we have some consolidation, but then remember the market will always, accumulate, manipulate, and then distribute. And of course, if the market is bullish, it will accumulate. You know, um, accumulate, manipulate on the downside, and then the real push will be, of course, bullish. Where does the market manipulate to? It will manipulate to a specific demand, left once, probably the last demand before the consolidation, or else an imbalance left behind. These are some of the concepts that you need to be able to have them in fingertips. And remember, it's always the skill. Forget about the money first. It's always a skill. Grow the skill, the money will come later. Just grow the skill first. Be good at what you do. And in that, I think um, that's it for today. I just wanted you to understand that before you check the trade, have the mind in terms of the basic bias. Bias is very important before anything else. Push for the bias first. Once you push with the bias, now you go to models, sell model and a buy model. And then from that, you move to what you call the structure. And then from structure, you go down to order flow. Remember, there needs to be a logic behind you taking that trade. And in that, thank you um, for watching this video. It was a pleasure to interact with you today. In case you have any questions, please always have them in the comment section. And because this is a new channel, I'm trying to as much to share my ideas that I trade. Kindly comment and share to somebody who might be very interested to understand these terms, or else um, strategies for them to be profitable. Remember, we are not fighting against anything. We are fighting against poverty, and we need to be better, analyze the market with analogy. And for that reason, I wish you a good evening and afternoon. Thank you, and let's talk. Let's meet in the next video. Bye bye.